All right, welcome back. And today I'm going to talk about the big picture at the high level about the national housing market. And we can talk about the mainly everybody, not just investors, primary owners. So the balance between supply and demand, and is it a buyer's market or is it a seller's market? So let's take a look and let me share my PowerPoint. And this is SeeWing Yi from the Year Real Estate Network, by the way, and just go ahead and take a deep dive. All right. So, housing market update, July 2026. Buyers take the wheel. Sellers now outnumber buyers by 51%. Wow. I have not seen this. You know what? I've been a real estate investor for 20 something years, and the last time there's a buyer's market, I would say in the early 2010s. Okay, 20, right in the aftermath of the housing crash. The housing crash occurred in 2008, 2009, and then the bounce back occurred the early 2010 into like 2012, 2013, 2014. So that was a great time, right? There's so much. I remember those days. There were so much opportunities, but people that took advantage of those buyers market. What you know what I mean by buyer's market, right? The buyer have all the advantage. They are dictating the deals, and the sellers is at the mercy of the buyer. So it's a good times, but so the question is, uh, how long this buyer's market is gonna happen. So we'll see. Let's talk about it a little bit, all right? And then I want you to comment below as well. What do you think? What's going on in your corner of the market, in your, real estate is local. So share with me where are you hearing this video from, and what area are you living? What's going on in your local market? And I'm very curious to find out. So please comment below. All right. So yeah, sellers are now outnumber buyers by 51%, pushing nearly 4 in 5 major US metros into a buyer's market territory. All right, so home buyers demand hit a record low, another record. Buyers in market, almost 1 million of them uh, is in market. So record low, right? Down 2.5% month over month from last year. So there are 1.4 million sellers in the market, lowest in a year, down 0.3% month over month. There's a surplus of seller, 51.3%, more sellers than buyers, nearly matching December's record of 51.8%, up from 47.9% in June. So buyers are dropping out faster than sellers, giving the buyers who remain more options or more negotiation power, said Asad Khan, senior economist with Redfin. So part of the reason why, as you know, right, the mortgage rate right now, per Mortgage News Daily, uh, the uh, the mortgage rate is around 6.7%. So is very very still an elevated rate, and so that pushed a lot of demand down. So there's people waiting in the sidelines. The it's just That's what's happening. All right. So there's a lack of demand and there's a lot of supply. So for the remaining buyers who are motivated to buy right now, they have a lot of negotiation power. So it's a good thing for buyers, okay? For real estate investors too, right? For real estate, which I work with, of course. For those of you that know me in my YouTube channel, real estate investors have a lot of opportunities to do some great deals, buy below market, and we find stress sellers out there. So we have a lot of negotiation power. We can negotiate for the price, the rate, and term. So this because there's less competition. All right. So similar with owner-occupied buyers as well. So let's dive deeper. All right. So Yeah, there's a widening gap between buyers and sellers. The estimated US buyers versus sellers, as you can see, June of 2026, right? The disparity. So this isn't a supply story, sellers barely move, 0.3%. So buyers pull back sharply because of the high rates, the affordability factors, there's a lot of economic uncertainty and all that. So yeah, the mortgage rate is at a 1 year high since last year, 2025. Of course, widespread economic and geopolitical uncertainty kept housing hunters on the sideline. People just you know, analysis paralysis. It's just it's an element of uncertainty out there. People are scared to take the plunge because buying a house is a lifetime biggest one's a person's biggest financial decision, right? It's a lot at stake. So I understand what's going on. So some prospective sellers pull back too. So there's a slow demand, lack of motivation. Yeah, you can make the argument right now is a frozen market, right? A lot of people come up with different terms. Frozen market, static market, is boring market, if you will. Nothing is going on, right? Just except negative headlines, right? So, all right, let's go continue. So, Miami, Nashville, and Texas lead the buyer's market, as you can see by the percentage here. And why these markets? Miami and Nashville, pandemic era new construction and investor supply now meets locally priced out buyers. There's a lot of supply, a lot of new constructions in the Sun Belt markets, especially in the South and Southeast. And because it's easier, much easier to build in these Sun Belt markets uh, 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 because it's easier, right? Those cities, those states allow new construction. There's a very lax zoning and permitting requirements. Plus, there's a over for many years the Sun Belt, like in the southeast and southwest, have a lot of population migration, job growth and all that. Whereas the Midwest and Northeast, you do not have the pandemic population growth that you see in the Sun Belt. All right, so let's continue. Just six metros still favor sellers market, and most of them are in the Midwest and Northeast, like such as Nassau County, New York, Newark, New Jersey, Providence, Rhode Island, Milwaukee, Wisconsin, New Brunswick, New Jersey, and Montgomery County, Pennsylvania. So as you can see, so sellers are still dictating the terms because there's a lack of supply in these markets, severely lack of supply, because there's no new. In fact, in the Midwest and North East, for years, you do not see new construction, okay, because of the, people are, moving away from the Midwest and Northeast into the Sun Belt for decades now, and plus it's very very hard to build new construction in the Midwest and Northeast because builders they want to go to a new path of growth in the Sun Belt, in the southern states and the West, not in the Midwest and Northeast, where steadily Midwest and Northeast are losing population. But right now, I mean, still, yeah, okay. Competition still pushes price up where sellers have the edge. As you can see, 39 buyers market and only six sellers market. So home prices still rose 4.2% year over year. In the six sellers market, nearly double the 2.3% seen across the 39 buyers market. So even amid a national buyers tilt, local competition still determine who sets the price, where demand outpaces listings, sellers keep pricing power, and everywhere else, negotiation room has opened up. Where I live in San Francisco Bay Area, I've been living here for well, more 4 decades. I see here what's going on. So there's a seller's market Yeah, I lived in San Francisco Bay Area for many, many years, and in the city of San Francisco, you see some extreme sellers market because of the AI boom. In case you have not heard that, and lately you have seen houses are being bid up, $1 million over asking. Is that just crazy? Yes, AI technological boom is taking over the city of San Francisco. But just so you know, real estate is very much localized, right? And so it's down to the neighborhood, right? It's down, not just the city, down to the block. So every local market is very, very different. To me, there's no such thing as a national housing market, but I'm still sharing the housing market to all of you out there. All right, so let's continue what's going on here. So now through Labor Day, which is coming up, in a few weeks. Wow, how time flies. Yeah, there's a potential sweet spot, meaning that there's a equilibrium. There's a balance of a supply and demand. Sellers and buyers are trying to meet in a middle ground. So there's still a lot of opportunities out there if for those remaining few that are really motivated. So at the end of the day, buyers hold the leverage. The buyers that can take their time, negotiate the price, negotiate the terms, avoid the multiple offers bidding war from 5, 6 years ago during the pandemic. And sellers are motivated, because they have some life things going on, job relocation or their family upgrading, whatever, and they need to sell their house, and there's not too much demand because of the mortgage rate is being so elevated, and housing affordability. In case you don't know, affordability is at a crisis, is at an all-time low because of the skyrocketing home prices in the past few years, in the past 6 years, when they are back in 2019, right before the pandemic, skyrocketing home prices of a triple, quadruple digit in many markets, right? uh, just a few years ago, and the wages and the people's income have not caught up with it. So now, the medium home prices nationally is how much in the mid 400,000, right? It's a lot of people cannot afford to buy, and that's very yeah that's very, very concerning. All right, so let's continue. And yep, so competition still pushes price up where sellers have the edge, but not much. All right, so what this means for out-of-state buyers, builder incentives get stronger, you know, in Texas metros with active home building pipelines, Houston, San Antonio, Austin, Fort Worth. Rising seller surpluses typically translate into deeper rate buy down, closing cost credit, and price concessions on new construction. Negotiation room on turnkey single family home, right? That's a lot of sellers rate buy down, incentives. So, especially in Texas and Florida. As a matter of fact, our investors, of course, we focus on, I help my investors from out of state to buy turnkey cash flow properties in the hot markets, including mainly in Florida and Texas. So we are seeing builders try to entice our investors to buy their properties with amazing rate buy downs and seller costs incentives and waiving first year property management fees. So, in fact, our investors are getting some great deals right now to buy down the rate all the way down to 3.99%, 30-year fix, 5.5%. So as a risk investor, it's a buyer's market, less competition, a lot of negotiation power. So I'm encouraging a lot of our turnkey mom and pop investors from California to buy out-of-state cash flow properties in Florida and Texas for this very reason. because this is a small window for buyer's market. We don't know how long before the buyer's market gonna end. It ends maybe, after the Iran war, maybe when everything gets better into maybe a year or 2 years from now. If the mortgage rate comes down, below, 6% handle, who knows? 5.99% mortgage rate in my mind triggers the tremendous demand, but we're not there yet, so who knows? Right. So right now is great time to pull a good deal for our investors from my perspective. All right, from as a primary home buyer, you kind of feel the same way, right? I mean, for whatever motivating reason you have, if you got to do it, you got to pull the trigger. If it is right for you, then do it because uh, there's a lot of negotiation power, like I said. All right, so let me see what else. So buyers market conditions won't last forever. Okay. So the key takeaway is buyer demand hit a record low right now because of the mortgage rate being what it is right now. Sellers now outnumber buyers by more than half nationally. Okay. 39 or 49 major metros of buyer's market led by Miami, Nashville, and Texas. Only 6 metros still favor sellers. We discussed that, mostly near major East Coast job centers. Price growth still runs hotter, 4.2 versus 2.3, where sellers retain leverage. The window between now and Labor Day favors motivated buyers and sellers alike. All right, so that's my takeaway. So, what is your takeaway? Please comment below what's going on in your local market. I'm very curious to hear. So, yep, the market is at a standstill at a paralyzing stage. I'm kind of a little bit concerned. There are too many people waiting on the sidelines, especially real estate investors. Who about right now, this buyer's market, there's just so many deals going on. But I certainly understand the economic uncertainty with the AI technological boom is scaring a lot of people. People are scared about their jobs and with the Iran situation. So everybody's paralyzed with fear and nobody's taking action. Not nobody, but I don't believe that way. I'm a contrarian, where there's a lot of fear in the market, I take advantage of opportunities as a real estate investor, and you should too, right? So I have this contrarian thinking. As a primary home buyer, if the situation is right, if you gotta, if you very have a lot of motivation, if you gotta do it right, if you have a job relocation, or if you have a larger family now, you need to move, uh, yeah, then that's your motivation. So this is a buyer's market. You should take the plunge. If you can qualify for the loan, of course, you have to run the numbers, work with a loan agent to determine how much house you can afford and all that. So at the end of the day, yeah, it's a boring market, if you will. No housing crash. There are some housing correction in some spots, some areas of the country, but there's not a housing crash because there's still a lot of people are sitting on their low historical mortgage rate. They're not moving. They're sitting on the low payment, and 40% of the homeowners out there, their whole houses are free and clear, so they're not moving. So there's a lack of supply out there for people to buy, and there's also lack of demand because of a higher rate and the historical housing affordability issues, right? People can't afford to buy a house anymore as well. So this is such a weird housing market. So all right, that's all I have to say. Thank you so much. If you see any value from this presentation, please like and subscribe to my YouTube channel. And also, if you are a real estate investor, please, if you want to be one, especially, please put your email into my database on my website below, so you can become a free member of our real estate network, so you can receive weekly email into your email inbox, so you can learn more about real estate investing and be a part of our investing community of several thousand free members. All right. Thank you so much. This is SeeWing Yi. Thanks for listening and watching. I'll see you next time. Bye bye.